for a profit there. We are out of oil. That is a $3,000 profit. So we will take it. When there's a big divergence between what retail is doing and what institutional money is doing in blue, be very, very careful. We've been long. We rode this up as we saw the early signals, and we've been making money doing it. Okay. So if you're asking, what do I do with gold right now? The answer is last week we had the jobs number, and it was really an important event, right? Jobs basically came out not great. Okay. So jobs kind of missed. And where that takes us in terms of kind of market expectations is now it's all about CPI. And what people want to see in this case is they also want to see CPI coming down. When I say people, what am I talking about? Well, if you're somebody who wants to see the stock market rally, if you want to see gold rally, if you want to see, assets kind of move higher, you want to see the consumer price index show some economic cooling alongside this jobs cooling. If both of these two things are kind of coming down, right, it could actually be still an okay scenario. Because if you get inflation cooling while jobs are also kind of chilling out as well, then the Fed might just say, hey, let's go ahead and cut rates. Right? Let's go ahead and bring rate cuts into the picture. But let's offer the scenario here, at least the possibility, which could be the case, that inflation actually comes out and it's not really going anywhere, or maybe it's even going up. Either of these scenarios, and now suddenly you have a different picture from the Fed. If you get cooling jobs, but inflation is still a problem, the Fed may just stay flat for a longer period. They're probably still going to cut rates. The question is, are they going to cut it sooner or later? And we're going to get that answer. We're going to get a little more clear of a picture as to what they might do based on what we see with the consumer price index. First, just really quick, check the kind of full movement of the market here today. Take a look across the board here. So we've got the S&P 500 coming down. Same thing with the NASDAQ, same thing with the Dow. The dollar index is actually looking pretty strong here this morning. And the euro coming down, pound dollar coming down. And at the same time, you've got gold kind of chopping flat, but still stays relatively supported. We've got 21.78 per ounce right now. That's in US dollars. Still pretty strong in terms of the price of gold. Doesn't seem to be giving back any of those gains just yet. At the same time, we've got oil coming down here this morning. And overall, again, a bit of dollar strength, a bit of gold holding up. I would say that that's looking a bit of risk off, especially with stocks down as well. So as we go into this morning, this Monday morning, it seems like kind of the main approach of the market is to stay pretty risk averse, especially with CPI on the horizon. Who can blame them? A lot of people might just be taking profits, might be taking money off the table ahead of that CPI number.
Did you know that we have 100% free trading tools and data available for you on our website, a1trading.com right now? We have free courses for you to browse. You can also check out things like retail sentiment and free articles from our analyst Frank that include things like Edgefinder screenshots and trade setups. You can find all of this and so much more for free right now on our website, a1trading.com.
Here's the S&P 500. We'll take a look at the 4-hour chart. Coming back down to support, and will be very interesting to see how the stock indices can react to levels like this. Again, what happened on Friday was the jobs numbers came out actually pretty weak. And initially there was some chop, but the follow through was to the downside. We saw again with the labor market looking a little cooler, it is actually suggesting, in my personal opinion, that we may see the Fed need to pick up the pace in terms of its rate cuts. If we continue to see economic data that's cool, The Fed's going to say, well, we don't really want to see unemployment tick up. By the way, unemployment rate, guys, went from 3.7, it went up to 3.9. And that's a meaningful move. And it's probably catching the attention of the Fed. If that goes up into the fours, I would imagine you would get even more attention from the Fed, right? Because inflation, they want inflation to come down, but they also want jobs to stay okay. And so if this number continues to creep up, you may see more pressure on the Fed to cut rates. Now, wouldn't rate cuts be good for the stock market? Well, yes, but only if the jobs market looks relatively strong and inflation's coming down. That's when the stock market will rip, right? That's what's been causing it to rip, is the theory that that could actually be the case. However, again, recently we've seen a little bit of a counter to that, where we're seeing, well, the economy looks like it might be seeing some trouble alongside that inflation coming down. That's not as bullish for stocks. So I've been kind of vocal about this, but I do think that the S&P and the NASDAQ, they need to pull back here a little bit before I personally get interested again. What do I think is a reasonable pullback? Well, I've made this point several times, but I do think that a 5% correction in the S&P 500 from its highs is an appropriate pullback. That happens, by the way, very frequently, very often in stock market history. In fact, on average, I saw a cool stat. On average, you get a 5% or greater pullback 3 times per year in the S&P 500. We haven't had one yet this year. So here's one that could potentially come into play. A 5% pullback brings us very nicely down to this level of support here. And that is, again, that's a 5% corrective move. It looks pretty ugly in the short term, but that's still very, very appropriate in a longer term pullback. So in my view, that's where I'd like to see the indices go to see a possible, bullish setup, etc. NASDAQ's pulling back here a little bit more today. NASDAQ, same kind of story. And in fact, the NASDAQ is inherently a little bit more volatile usually than the S&P and the Dow. So if we take a look at this one, kind of set up our zones, a 5% pullback is only about here. Very possibly we could see a 5% pullback in the NASDAQ. In fact, you'd probably, arguably, see that faster than you would see one in the S&P. In this case, if we really saw a corrective territory, you could see like 8%, right? 8%, by the way, would be kind of erasing the gains that we've made this year so far. And is that possible? Sure, it's possible. I'm not necessarily saying, oh, I think this is happening, right? There's a very different, put it this way, I don't have shorts on the S&P. I don't have shorts on the NASDAQ. I don't have a negative position on them. I'm just pointing out that in terms of the indices and how I'd like to trade them, I'd like to scoop them up if they do pull back to those kinds of levels. And I think that the risk to reward premium looks a little bit better. The setup looks a little bit better after a pullback in that, rather than trying to buy things before that. It's my personal setup. Let's see what else we can get into here. So again, stock indices kind of pulling back here this morning. At the same time, we do have gold here, which hardly pulling back at all, you can see. And quite interesting there. I need to check on my GLD position. I believe, yep, we trailed stops here yesterday. USO, I believe, should be closing me out. Let me see. We are like right at stop. So let me see where we at. Actually, you know what? We're just going to go ahead and close this position. So I'm going to close my oil trade for a profit there. We are out of oil. That is a $3,000 profit. So we will take it. It's pulled back a good bit here and kind of broke my level of structure on the, yeah. So with this breakout here, I'm just going to go ahead and close, take profits on oil. It's been a little bit choppier than I expected it to be. And when this broke, right, when we broke higher, I thought, okay, I actually added to the trade here. So my initial entry here, my secondary entry here, we did see a pop higher, but again, couple rejections here. I'd like to be back in oil, but I'm going to wait for a new signal here to set me up for another trade, because right now this chop has gotten a little bit too indecisive for me. So I've just taken profits on oil, made about $3,000 on that, which of course, if you were watching during this time, I was up 10,000, right? So hindsight 2020. We were up, 10,000 at one point. Shoulda, coulda, woulda closed it right there, but we'll take a profit where we can. And again, with this market kind of rolling over, I'm just going to step out of the way for now. What I'd like to see for oil, people who are bullish oil themselves, what I'd like to see would be, honestly, clear those highs, pull back, and maybe I'll rejoin the idea. But for now, this is getting too choppy for me. Yeah, so that's oil out of there for a profit. Silver, really quick, is another trade that I have on. Silver, I've trailed my stop loss just below structure lows here, trading it via ETF through SLV. So we're up 670 bucks on silver. I need to update you guys too on my Chinese stock position. So here's gold really quick. We'll do gold. Gold is flying here. I see nothing else to do other than just continue to manage the position. So I've trailed my stop loss several times on this one. This one keeps wanting to run. And hey, if we break through the highs and we keep going, guess what? Trail stops again, right? It's just a really, from here, if you're wondering, hey, how do I join this trade, or how do I, how far is it going to go? When should I short it, right? In my personal opinion, if you really want to know what my opinion is if you're in the trade, then great. We're making money. We're good. We trail stops. We let it run. And members who are in the group and caught this trade with me, shout out to you. We're being rewarded for our patience now. What's going to not reward you, for people who are not inside of our VIP room, who are not in gold right now, what's going to punish you is watching this move and getting anxious, getting impatient, getting excited. A lot of traders right now are shorting this, okay? But they're not shorting it from up here. They're shorting it from here, 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 here. I can show you that data. We've talked about this several times on the show, but let me pull it up. First of all, notice really quick that based on a retail positioning standpoint, gold is giving us a bullish reading. Let's dig into that. How does the algorithm know that, again, retail positioning is generating a bullish signal? Why? Why is that generating a bullish signal? Let's go look. So if we take a look at retail positioning really quick, what we can see here is that as this gold market has continued to drive higher, retail traders are only 31% of them are long, 69% of them are short. So again, retail money is parked on the wrong side of this move. As gold continues to push higher, retail traders are saying, it can't go further. I got to short, 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 until the whole account blows, right? That is game over, day in, day out. That is how traders lose a bunch of money. They say, this thing has gone too far. It's got to reverse. Come on, man. It's going to, this is getting ridiculous. And they just fight that movement. And, let me add something else context-wise here, guys. I want to show you one of my favorite indicators within the Edge Finder. It's the smart money indicator. And what we can do here is we can select gold from our drop-down list. And again, I've made this point many times, but I want to continue to reiterate it. Look at this, okay? Institutional money is in blue. Retail money is in red, okay? The white line is the price of gold. This by itself should convince you that you need to be very careful just trading alongside a retail crowd and trading against big money. If you do not have these tools, this is why this is worth the investment. I'll tell you about that in a second. Let me explain something to you. If you are just shorting gold right now and you don't know why, and you don't know why it keeps going up, you are respectfully trading exactly the same way as all the other traders out there who are losing a ton of money day in, day out in the markets. I'm not trying to disrespect you. I'm just pointing this out to you. This is a repeatable pattern. I've done this, I've streamed on YouTube since like 2019, 2018. I've been doing this for a long time. This story has played out in front of my eyes hundreds and hundreds and hundreds of times, okay? What happens is institutional money starts building a position, and as the market starts to rip higher, retail traders all bet against that move, and they just continue to get slapped over and over thinking that they're going to call the top of the move, okay? This indicator by itself has paid for itself many times over. for me as an Edgefinder user, and I have paid for the Edgefinder, not the retail price, but the construction price of building the software. Let me tell you this tool is incredibly useful for spotting what institutional money is doing relative to retail money, so you don't get caught in this trap. When there's a big divergence between what retail is doing and what institutional money is doing in blue, be very, very careful, okay? Trying to go against that. We've been long, we rode this up as we saw the early signals, and we've been making money doing it, okay? So if you're asking, what do I do with gold right now? The answer is you missed it. Accept that you missed it if you missed it. It's okay. The next move will be around the corner. My point is to tell you that strongly is that a lot of people out there are just going to continue to do what they do over and wonder why they lose money in the markets.
I'm kind of looking around, kind of like what was the PMI, what's in oil. I'm trying to see if there's any changes in the other indicators that would force CPI to go somewhere. And then I look at previous volatility. So what happened last time, then previous before that in terms of volatility. So we're probably going to move like 50 pips or whatever the direction. So what I kind of see is if we get lower than expected CPI, we're going to drop like a ton of bricks. And then if we get higher than expected CPI, it's going to be subdued. It's not going to be as much because the market has really priced themselves into becoming bearish on it. So yeah, I think that's kind of where the market wants it to go. And if it doesn't go their way, they are going to resist dollar bullish reaction.
Sure. Yeah, I think it will be interesting to see again with CPI following that jobs data, which was really really weak. If the inflation story will also kind of mirror that, like, are we going to get a scenario where jobs data is cooling, but so is CPI, which would be probably pretty dollar bearish, or is there going to be cooling in the labor market, but at the same time, inflation kind of stays sticky? What do you think about that scenario? Let's say that you get jobs data. Obviously, we know what jobs data is. Jobs data came out pretty weak. But what about if you get jobs kind of cooling, but at the same time you get inflation staying high? What is your thought process in that scenario? How do you approach that environment? Because it could happen.
I think I'm not gonna. It's not correcting you either way, but it's what is normal is inflation to fall and jobs to get worse, which hasn't happened. So it's kind of like welcome to the party, unemployment rate, an NFP. So to me, it's kind of like it's a mind twist because it's so abnormal because they should fall. Also, inflation should fall and unemployment should rise, and they haven't done that. So when they do opposite, it's kind of like a brain twist for me. But in that scenario, I think I'll still go with inflation. I will still say, okay, inflation is lower, inflation is where it is, and I will still be all bullish, and I will deal with that later. The other thing that I have to remind myself then is when is the FOMC? What is FOMC going to say? What is Powell going to say to that? And he's going to be higher for longer.
Yep.
So yeah.
No, and that's the thing is, could inflation stay sticky with cooling jobs? The idea, of course, as you mentioned, is that if you get cool down in jobs, it should theoretically be that hiring and spending is going to deteriorate, and so should inflation. The only scenario that I can see that would not be the case would be if there was more still supply issues that are causing inflation. If jobs are like demand issues to inflation or lack thereof, supply side stuff, whether it be if you see, for example, not a good day to give this example because oil's coming down, but if oil were to be on the rise again, which it has been kind of secularly in the last month or so, if you were to see oil start to tick up, that could still paint the picture of cooling jobs, but sticky inflation, not because there's a lack of demand, but because there's like a supply issue, right? So I don't know. Interesting times ahead. And I guess the follow-up question too is, Ivan, we're seeing stocks drop, we're seeing bonds rally, and we're seeing gold up as well. But then there's Bitcoin going up at the same time. So it's kind of a confusing room right now. I would actually say, and this might be just weird, but it's almost like Bitcoin is rallying alongside gold as a risk off, like a concern about the dollar. I don't know. Really interesting moves happening.
Okay, let me debunk it. It's about money. It's about money flow. Bitcoin is going higher because of the ETF, because of, I guess, it's more
accessible,
more accessible and higher, like more more funds going into it. Even though it's still very risky. Also, we did see Bitcoin going from, what was it, 60,000 to 50,000 in like an an evening. So it's still incredibly volatile. But that's kind of Bitcoin in itself. Bitcoin to me is a mirror of the S&P, just more risky, more volatile. You invest in Bitcoin when you have more money, basically. You invest more money in the stock market when you have excess funds. That's how I see why it goes up. For stock market to fall, I don't know, Mike. It has risen, was it 25% since October, beginning of November? So this is just a small little correction. And to be honest with you, with CPI coming out tomorrow, we have to have some rebalancing at some point. Because if we have gotten 24-25% return in this period, and you're like, I'm gonna gamble it tomorrow,
right? Yeah, and
the manager is not gonna be happy.
Yeah, it doesn't continue like that forever, and I think that there's probably a bit of a reset happening. I would actually point, as you just mentioned, we've had this really hot run. At the same time, you see gold doing well, silver doing well, bonds doing well. Those are signals. One of these markets is going to come down. It's either going to be gold, silver, bonds, or it's going to be the S&P 500, but I don't see a scenario where they both just keep screaming higher overall.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.